One of the worst habits that I see traders doing is trying to constantly stare at the screen in an attempt to find the next trade. And while this level of focus may be beneficial, it is actually a very destructive habit. So, while we review the trades today, I want to discuss the dangers of overfocusing and then offer a few solutions. Let's take a look at how the market opened up today. You'll notice that we have already taken a trade. It was this higher low up here around 4222. This is where we entered in. And then we exited around 4225, which is somewhere up here near the highs. Unfortunately, you won't be able to sweat it with me, but we can talk about what happened. First of all, the market gapped up, then it pulled back, and then we started to make this double bottom. And this is a pretty good area where I like to find trades. I like this powerful movement up from the start. Remember, the open is one of the best places to look for a trade because there is a lot of action, and usually the market likes to make up its mind for what it wants to do within the first hour or so. So I would say this is one of the best places to actually overfocus, to actually lean in and look for a trade, because you will most likely find a good one within the first 30 minutes to the hour. The market rocketed up, it started to pull back, and this is where I thought that, we're coming down near support here. We're making this kind of double bottom, higher low action. We're getting some nice green bullish candle bars here, so there is some nice buying. We broke above the EMA here. The EMA usually acts as resistance, and the fact that we can break above it is pretty good in my opinion. So when we start to get that, I consider the buy here. I think that we can push up higher, and then it's good to take profits right before the big major resistance, which is up here at the highs for the day. So we're starting off with a nice win, and that's because we were able to focus in when the market was in a state that is very relatable to our trading plan. We have setups that we like in this zone, so we're going to be focusing in. Now let's talk about what happens when we are in a state that we don't like. And actually, the market is currently in that state after we have taken profits. Let's look at what's going on here. There's a ton of overlapping bars. The market is chopping back and forth, up, down, up, down. We're near the highs of the day. So, we want to be buying. We want to be buying with the trend, but we're also near major resistance. So it's kind of iffy, right? And because of that, I don't want to trade here. I don't really want to look for something. And I know there's probably a 90% chance that I'm not going to find a good trade here. And that's where we need to back away and we need to invest in something else, which in my opinion is where distractions are very, very nice to have. Because without those distractions, our emotional self is going to try and tempt us. It's going to try and nudge us into clicking that buy button. It's going to make us want to hit buy, or it's going to make us want to hit sell. And it's going to start to make things up. We're going to start telling ourselves that, whoa, there's a double top here. I think I can trap these people who are trying to sell this double top, and I can possibly buy here. And then it might tell us, but wait, there's a double top, and then the market's trying to break out. It's making a failed breakout. Why don't we try and sell that? And while, logically these sound like plays that could work, they're just not things that we want to be taking, especially when the market is in a poor state like this. Many overlapping bars, near the highs, resistance. There's so much indecision, so much congestion up here that it's just not a great place to take a trade. And if you look back at it, if we did take a trade, we would probably get chopped up and we would probably take on a full loss with our trade. And if we did take profits, oh great, we took, a small little smidgen of a profit. That's not worth all of the headache and stress that's going to go into taking these trades. So what do I suggest? We need to find a distraction. And let's think about what is the worst thing you can do. Well, we talked about that. The worst thing we can do is stare at this screen, which means that the second worst thing we could do is to look at another screen. And for me, that would be something like Netflix, or we could go on our cell phone and open up TikTok. We could look at Instagram, find something entertaining to invest our time in. And while that may be the second worst thing to do, it actually makes a world of a difference. Just because it's the second worst thing doesn't mean it's a good thing, okay? It's actually something that's very good for us. We're no longer going to be tempted by the market because we have moved our mind off of it. We're not staring at it anymore. There's no way we can get FOMO'd into something that we are not staring at. And we can have a little fun on the side. Maybe you have some mobile app, some game that you love to play, a little thing that you can spend, 5 minutes in, little things you can kind of just let your mind wander and invest in. Now, those examples aren't the healthiest. Yes, I know social media isn't great, but again, it is much better than staring at the screen. So, what are other options? Well, let's first talk about what makes a good distraction. Number one, it has to be low maintenance, something that we can easily enter in on and something that we can easily exit. So, Netflix, our favorite TV series, we go in, just click through, scroll through, find Breaking Bad. I want to watch the whole season of Breaking Bad. Let's start watching it. And then if the market ever shows a trade or a state like something good is about to emerge, I simply hit pause and then I'm back in the market. Very simple, very low maintenance, get in, get out. What would be something bad? Well, let's think about cooking. Maybe I want to go fry up a steak or fry up some eggs on the stovetop. And then I look over my shoulder and I say, whoa, the market's looking great here. There might be a good trade. Well, now we have a conflict. Do I want to burn my house down or do I want to take this trade? That's where the low maintenance thing comes in. So make sure that you're easily able to exit whatever you're doing so that you can come in and take the trades when necessary. Secondly, make sure that it's pretty low on your mind. Make sure that it's not heavily stimulating, something that takes up a lot of your logic, because trading itself is very mentally taxing. And if we go on the side and try to do something like a Sudoku puzzle or a crossword puzzle, all we're doing is we're using that same energy. And then when it comes down to it, when we do need to make a trade, we may no longer have that mental capacity to execute well. And to me, that's an issue. So where are the easiest places to look for a good distraction? Well, yes, we have the bad habits. We have something like Netflix. But I would suggest looking at something physical. You have your mental mind, move to your physical, the other half of your body. Physical could be something as complex as a yoga routine. Go through a yoga routine, might take 20 minutes, 10 minutes. But during that time, you could always stop your yoga routine to focus in on the market. Do some push-ups, do some stretches. I actually have a stationary bike that I ride on sometimes. And if you don't have any of this equipment, you could simply pace back and forth, walk down the hall, walk back, anything to ease the mind, anything to take your mind off of the charts. And actually, physical is probably the best. You're going to get your heart going. You're going to stimulate your mind. It's healthy for you. Those are probably the healthiest habits. But whatever you do, do not stare at the chart. I mean, let's look at the market right now. Chop, it started to sell off, and now we're back near the support zone, but we're kind of in some kind of range if we look at the tops and the bottoms. And I'm not excited about this. There's nothing to really get excited about here. So it's better to go off and then wait and come back when the market is in a much better state. Okay, fast forward into the day a bit. This is what the distractions were for. I was probably actually watching some Netflix, hit pause because we are looking at a great area for a trade. Now, why do I like this? Well, what happened earlier in the day? We had a massive sell-off. If you remember, we had that gap up early in the morning and then it started to sell off. Well, that sell-off actually crashed a lot more. And now we are down here at around like 4197. So pretty big 20-point sell-off down here. And then what do we notice? We created this swing high. It actually created a vacuum down here. So a lot of buyers were able to buy off of this double bottom. We could talk about that too. That would have been an awesome buy for me. I would have loved to buy here, swing that up, take some profits off near the high, but oh well, we missed that trade. Let's focus on the opportunities that are actually being presented to us. So we have that high up here. It's creating this other swing high up here, which is creating some resistance for us. And then we have to think about those buyers. Who is getting really excited? There's people down here that bought, people down here that bought. Everyone is getting excited. They're on this train. They're on this like train FOMOing out, and they want to see a massive reversal. But what is happening? They tried to break out once. It failed. They tried to break out a second time. It failed. A third time, it failed again and created a double top. So at this point, I'm starting to see some weakness with the buyers. And ultimately what happened is they flushed all the way below the EMA. And then when we came to the EMA again, it acted as resistance. The tables have turned. And any buyer that has not recognized this is probably going to get trapped. And so on the second attempt at the EMA, I actually sold here. This is where we came in and sold. And if you notice that we've already taken our first profits, and I'm looking for a second target, which is just a little bit bigger. And then you'll notice there is a third attempt at the EMA. You probably could have sold here as well. I think, let me clean this up a bit. Any one of these areas would have been a good place to sell. I took the second one, third or first, it doesn't matter. These all would have been pretty solid. And now I'm looking for the biggest profit target, which we actually take right here. We're exited. We're fully out of the trade. Why do I like this? Well, if you remember, we had the two swing highs that are creating some resistance up here. And then we have the support down here. So you can kind of think of this as a trading range. And with a trading range, we always want to be oscillating back and forth towards the middle. So with that in mind, the higher probability zone that we're going to test is this middle zone. That's where I'm going to be taking most of my profits. And then, if you want to push it further, if you like going for those big trades, you could also think about going all the way down to the bottom of the range. You could think about taking out the swing lows, going for, a new low for the day. That's not what I like to do. That's not my comfort zone. So I take all my profits here, but I can also see that being another scenario that could play out. And remember, how did we get here? We got here through distraction. We had that early morning. There were some great trades in there. And then it started to get messy. It started to sell off. There was a really big sell-off. Again, big sell-offs, big crashes, not something I like to trade. So I'm going to set up my Netflix. I'm going to go do some push-ups. I'm going to go practice some yoga, something to keep my mind off of the screen. And then when we crashed down, we started to come back and we entered into this kind of like range zone where I was looking for a trade. I noticed that there was some failure. The buyers were having trouble. That's where I lean in and then I start to look for my trade. And, we got paid off. It all worked out. We were able to find a good setup. But I think the most important part is that we had those distractions and we didn't end up taking bad trades or FOMOing in to some emotional ones because we were able to distract ourselves. So find your distraction. I think, it's going to be very pivotal. You might think it's stupid, but I think it's something that's going to change your trading, especially if you're able to take your mind off of the market.